Hello students, I am Dr. Panduranga Nayak, Principal of Swiss College, Bantwal. We have already learnt that salary as such has got four important components. Number one, basic pay. Second one, allowances. Third one, perquisites. Fourth one, profit in lieu of salary. Basic means you already know, already I explained that in my previous video. Allowances also we have already completed. Allowances nothing but additional amount paid to the employee in addition to basic, that is paid in cash. Of course, that is allowed in order to discharge the duties of the employee properly. Now the third part of salary or component of salary, that is perquisites. So what do you mean by perquisite? It is the benefit attached to an office or position in addition to salary or wages. So perquisites are also additional payment allowed to the employee by the employer in addition to the basic pay or salary or wages. Perquisite denotes personal advantage. Perquisite may be given in cash or in kind. If it is given in kind, it should be capable of being measured in terms of money. For income tax purposes, scope of perquisites is limited to the benefits received in kind and which are convertible in terms of money. Perquisites received in cash are termed as allowances for income tax purposes. So you must be very clear. Perquisite might be paid in cash or in kind. If it is given in kind, that must be in a position to be converted into money. You must know the money value of the personal advantage in terms of perquisite. So though it contains two components like payment in cash or in kind, for income tax purposes, perquisite is restricted to payment in kind. Whereas if it is paid in terms of cash, in addition to basic, then it is called allowance. In other words, perquisite, the term perquisite is a broader term which consists of allowances also. But for income tax purposes, we restrict ourselves to payment in cash as far as the perquisites are concerned. I think I have made things very clear as far as the meaning of perquisites are concerned. Like allowances, even perquisites are of three types. Number one, perquisites taxable in all cases. And second one, perquisites taxable in the case of specified employees only. And the third one is tax-free or exempt perquisites. So thus, it can be categorized into three parts. One is perquisites taxable in all cases. Second one, perquisite taxable in the hands of specified employees only. And the last one is tax-free perquisites or exempt perquisites. We will take up one by one. Most of the perquisites are to be valued. So separately there is a topic valuation of perquisites. Therefore, I don't explain here everything. So I just highlight the things, and when we take up valuation of perquisite, we are going to study everything in detail. Anyway, let us just study what are the categories of perquisites. Number one, perquisites taxable in all cases. Under that, some cases we will take up. The value of rent-free accommodation provided to the assessee by employer. Rent-free accommodation, okay, provided to the SSC by the employer. For example, employee might be residing in an accommodation of the employer only, for which he is not paying any rent. If it is let out to somebody else, the employer would have earned the rent. Therefore, it has got a value. So that value is nothing but perquisite value, that is taxable in the hands of the occupier or employee. The value of rent-free accommodation provided to the SSC by the employer. Value of any concession in the matter of rent regarding any accommodation provided to the SSC by the employer. For example, value of the accommodation provided to the employee in the market could be, for example, 10,000. But if that is provided to the employee for rupees say 5,000, the concession which the employee gets, that is 10,000 minus 5,000, the remaining 5,000 is nothing but the perquisite value of concessional accommodation provided to the employee. Any sum paid by the employer, third one, any sum paid by the employer in respect of an obligation which otherwise would have been payable by the SSC. Actually, employee would have paid the expenses or obligation, but now instead of employee, employer is paying. Therefore, the money value of such obligation, that is nothing but perquisite, taxable in all cases. Let us take certain examples. Number one, payment by the employer of employee's club or hotel bills, provided that they are not connected with the employer's business. Employee may be member of any club, for example, games club, sports club, or any club, or he might be remaining in a hotel. So bills might be, actually the bills have to be paid by the employee himself. But instead of that, if the employer pays, then that is taken as perquisite and that is taxable. But condition is that these clubs or hotels are not connected to the employer's business. If they are connected to the employer's business, that would have been tax exempt because employee is working for the business. Next, payment by the employer of any loan due on his employee. Employee has borrowed loan. Loan has to be paid by the employee. But on behalf of employee, if the employer pays the loan, repay the loan, that is taken as perquisite value of loan repayment. Payment by the employer of education expense of the children of his employees. Actually, employees' children might be taking education in some educational institutions. Then the expenses are paid by the employer, not by the employee. If employer is not paying, who should have paid? Employee should have been paid. So it has got monetary value, money value. To that extent, the employee is benefited now. That is a personal advantage. And therefore, that is perquisite and that is taxable in the hands of the employee. Payment by the employer of any salary of his domestic servant of an employee meant for his personal use and employed by the employee. See, employee may be holding high position, domestic servants may be employed by the employee, and salary of those employees, domestic servants, should have been paid by the employee himself. But instead of that, if the employer pays that, then that is perquisite value and that is taxable in the hands of the employee. Income tax paid by the employer in respect of salary of employee. If income tax is paid by the employer on behalf of or on the income of the employee, then that is the perquisite value and that is taxable in the hands of employee. If employer is not paying, employee would have paid the income tax on his income. But one exception is that tax paid by an employer on value of perquisite. Perquisite means non-monetary value. So that is not taxable, that is exempt under section 10, subsection 10cc. Then legal expenses incurred by the employer to save or defend the employee. Employee might be having some litigation with somebody else, and employee has to defend himself, and he has to take the help of the legal advisors, and employee has to pay for them. But instead of that, if legal expenses are incurred by the employer in order to save or defend the employee in legal proceedings, then that is taken as perquisite, because in the absence of payment by the employer, employee would have paid it. Then next point, any sum payable by the employer, whether directly or through a fund, but other than recognized provident fund or an approved superannuation fund or deposit linked insurance fund. Why? To effect an insurance on the life of the employee, or in respect of contract or an annuity on the life of the employee. So sum payable by the employer, whether directly or through a fund, to effect what? To effect an insurance on the life of the employee, or in respect of contract for an annuity. Annuity means annual payment on the life of the employee, but other than recognized provident fund, approved superannuation fund, or deposit linked insurance fund. Next one, value of specified security or sweat equity securities allotted or transferred directly or indirectly by the employer or former employer, free of cost or at a concessional rate to the SSE. So this includes stock option plan, employee stock option plan. Sweat equity shares means what? See, employees sweat out in order to see that the organization in which they work prospers. For the success of the organization or any firm, employees are also responsible. If they work hard, there will be more profit and the organization is going to progress. So to compensate them and to make them partners of development, they might be issued some securities, shares, either free of cost or at concessional rate. So that is nothing but specified security or sweat equity shares. They are allotted directly or indirectly by the employer or by former employer, either at free of cost. So nothing is recovered from the employee while allotting the shares, or at concessional rate. Market value is high, but for the employees that is allotted at a concessional rate. Next one, the amount of any contribution to superannuation fund, approved superannuation fund by the employer in respect of the SSE to the extent exceeding rupees 1,50,000. See, any contribution to approved superannuation fund by the employer is exempt up to 1,50,000. But anything above that is taxable. That is taken as perquisite, and that is taxable in the case of all employees. Then the value of any other fringe benefit or amenity or facility as may be prescribed under section 17 subsection 2 subclause 3. Now that includes what? That includes income of the employee, interest free or concessional loan. Employer himself may give interest free or concessional loan. That interest part that is taken as, or concession in the interest is taken as perquisite. Holiday enjoyment, free food, gift, expenses charged to credit card, club expenses, use of movable asset, transfer of movable asset, or any other benefit or amenity. So all these things we are going to study separately. So all these facilities or amenities have got value, and the value is taken as perquisite, and these perquisites are taxable in the hands of all types of employees. So it is taxable in all cases. Yes. Next category, first category is perquisite taxable in all cases. Second one, perquisite taxable in the case of specified employees only. Now we have to understand what is meant by specified employee. So who is a specified employee? So that we have to understand. So if any one of the three conditions mentioned below is satisfied, then he or she is called specified employee. For example, director employee. An employee is also a director of a company. So an employee who is also a director in the employer company, whether on full-time basis or part-time basis, whether continuing as a director for the whole of the year or not, is a specified employee. So the employee is not only an employee but also a director, part of management. So in such cases, if that employee is holding the position, then he is called specified employee. Maybe on full-time basis or on part-time basis, continuing as a director for the full year or not. So he is called specified employee. An employee having substantial interest in the employer company. So substantial interest means what? The employee is holding or is a beneficial owner of equity shares carrying not less than 20% of the voting power. In the case of company, directors are elected by the shareholders, and if you have one share, one vote, that is the principal normally, and therefore if not less than 20% of voting power is held by the employees, then we say that they are having a substantial interest in the employer company because they have got more than 20% voting power as far as the management decisions are concerned. Therefore, such employees are called specified employee. Then the third one is any employee whose income chargeable under the head salaries, including all monetary benefits from one or more employers, but excluding the value of all benefits or amenities given in kind, exceeds 50,000 is called a specified employee. Okay, the following perquisites are taxed. So you have understood who is a specified employee. Number one, director employee. Employee who is also a director in the company in which he works. Second one, he has got substantial interest in the employer company. That is by holding not less than 20% of voting power in the employer company. Third one, his income from salary, including all monetary benefits from one or more employers, but excluding benefits and amenities, that is perquisites, exceeds 50,000, then also is called a specified employee. If any one of the conditions is fulfilled, he is called a specified employee. The following perquisites are taxable in the hands of specified employee. Number one, facility of car. Car facility might be provided to the employee. Second one, sweeper, watchman, gardener, and personal attendant. So service of these domestic servants might be provided. Gas, electricity, energy, and water. For example, a gas company may provide gas free of cost to the employee. Electricity company may provide free of cost electricity and water also. So that way, education facility to the members of employee's household, either in educational institutions owned by the employer himself or in some other institutions which are connected to the employer. Transport facility, yes, like this. So many facilities are provided, and perquisites are taxable only in the hands of specified employee. These perquisites are taxable only in the hands of specified employee. But remember, in connection with this, according to the Minimum Wages Act 1948, the annual monetary salary of an employee will exceed 50,000. So as per the Minimum Wages Act, annual salary should be more than 50,000. If that is the case, all the employees will be specified employees. All the employees will be taken as specified employees, and it will be taxable in the hands of all the employees. So that is one more point to be noted. This is the implication. So this is the limitation of this particular provision. Alright, now the third category of perquisites tax-free perquisites. I'll just quickly run through. First one, medical benefits. So that is taxable, tax-free. Tea or snacks provided in office or factory during working hours. Residential accommodation provided at site outside the factory or workplace. Expenses on telephones including mobile phones, whether it is land connection, fixed connection or mobile connection. Expenses on telephones are exempt, tax free. Employees contribution to staff insurance scheme. So if group insurance is taken and the employer pays the contribution, then that is tax free. Scholarships to employees or their children paid by the employer. This is to promote education to the employees themselves or to the children. So in order to enhance the qualification of the employee, scholarships might be provided to the employees, or this facility may be extended to the children of the employees. Next one, the facility of conveyance provided but employer from residence to the place of employment and vice versa. The facility of conveyance provided, but this is not relevant. This is incorrect, wrongly printed, wrongly typed. The facility of conveyance provided, it should be by the employer from residence to the place of employment and vice versa. Then similarly, refresher courses. Okay. If the employer pays fees for an employee taking refresher course or management courses in order to enable the employee to perform his services more efficiently. See, once you join a job, that is not the end of it. So you have to upgrade yourself, refresh yourself. You have to keep track of latest changes in the field. So you have to attend orientation programs, refresher courses, either conducted by the employer themselves or outside by some other organizations. But anyway, any expense or any fees paid by the employer for the employee attending refresher course or management courses, that is exempt. The purpose is to improve the capabilities of the employees. That is the intention. So such expenses are treated as scholarship and that is tax free. Tax paid by the employer on the value of park visit. Already I told you about that. Park visit to government employees post abroad. So employees are working outside India, but they are citizens of India and they are rendering service for India but outside India. That is exempt. But no, this facility is not available, or benefit is not, exemption is not available to non-government employees and to those who are not citizens of India. Rent-free house and conveyance facilities provided to High Court judges. Rent-free house and conveyance facility provided to Supreme Court judges. The value of rent-free residence provided to a minister, specified officers of parliament, or a leader of opposition in parliament. For all these people, yes, the rent-free residence, so that is exempt. Accommodation provided is rent-free. Laptops and computers provided by the employer for the personal use of the employee or any member of his household. Okay. Interest-free or concessional loan if the amount loan in aggregate does not exceed 20,000 during the previous year. If the amount of loan is more than 20,000, then interest is not free, then that is taxable. So if any concession is provided, that is also taxable. But up to 20,000, if interest-free loan is given, that interest is not taken as perquisite. Okay. Last one, transfer without consideration to an employee of a movable asset. other than computers, electronic items or car by the employer after using it for a period of 10 years. So if an asset is used for 10 years with the employer, then that is transferred to the employee, then that is tax free, but this does not include computers, electronic items and car. Okay. Periodicals and journals required for the discharge of work. Okay, periodicals and journals are required for discharge of his work because as I mentioned, the employees must keep track of the latest changes in their area. Otherwise, they will be redundant, they will be obsolete, and they will be no more useful to the organization. Therefore, if they are to be useful to the organization and if they have to work efficiently, keeping track of the latest changes, then they may have to study periodicals, journals, etc. so that they can discharge the job properly. The last one, leave travel concession under section 10 subsection 5. So they will be given the facility once in a period of 4 years. So two-way conveyance, and therefore so leave travel concession under section 10.5, that is also exempt. Of course, there are certain terms and conditions. Those terms and conditions should be fulfilled. For example, in what class of train he has to travel, and in what class of that is of course some other mode he has to travel, and how many people he can take for leave travel. So like that, there are certain terms and conditions. So in that case, the concession might be given, and therefore that is exempt under section 10 subsection 5. Now there is a mention about medical treatment. Let me very quickly run through this. That's also exempt. First point itself is medical benefit. So medical treatment within India. See, the value of any medical treatment provided free to an employee or any member of his family in any hospital maintained by the employer. Employer himself has got hospital. Employee or any member of his household are given treatment, and that is free. In that case, that perquisite is exempt from tax. Next one, any sum paid by the employer in respect of any expenditure incurred by the employee in a hospital maintained by government or any local authority or approved by the government for medical treatment of its employees. So treatment is in government hospital or hospital run by local authority or by other organizations, but that is approved by the government for medical treatment of employees. In that case, the expenses are all expenses of medical treatment are given by the employer, so that is exempt. Next one, premium paid by the employer on the health insurance of the employee. Nowadays, health insurance is playing a very important role. The government and everyone is interested in health of the employees, and therefore if something goes wrong to the employee, then the dependents, they will be in deep trouble. Therefore health insurance is encouraged, and if employer pays the premium towards health insurance, that will be exempt from tax, and that falls under exempted incomes, exempted perquisites. Reimbursement by the employer of any premium paid by the employee on his health insurance or on the health of any member of his family. So in the previous case, employer is paying a premium, but here employee pays the premium, but that will be reimbursed by the employer. Next one, the medical treatment of the employee or member of his family is done at any private hospital, nursing home or clinic other than those stated in clauses A and B above, the exemption will be restricted to 15,000. Remember, if the treatment is in a private hospital or a nursing home or clinic, then it is exempt up to 15,000, and if it is more than 50,000, that is taxable. Of course, This exemption is discontinued after the assessment year 1920. This is because earlier standard deduction was not allowed to salaried people. But recently, Income Tax Department has allowed standard deduction to the employees. Earlier it was 40,000 and now onwards it is enhanced to 50,000. So standard deduction is allowed for the purpose of, for example, travel from home to his office and vice versa. So that's also not allowed now. Earlier it was allowed, but now it is not allowed. That is taxable now. Similarly, treatment in private hospital, it is fully taxable. Earlier it was exempt up to 15,000. Now we'll move on to the treatment outside India. So if the employer incurs any expenditure on the medical treatment of the employee or any member of his family outside India, either medical treatment of employee himself or any member of his family in India, to the extent permitted by Reserve Bank of India. So it must be approved by the Reserve Bank of India. And employer incurs expenditure in connection with the medical treatment of the employee or any member of his household. And next one is, if the employer incurs any expenditure on travel, previous one is medical treatment. Here, travel and stay abroad of the patient, employee or any member of his family, and one attendant who accompanies the patient in connection with such a treatment will be exempt, subject to the conditions that the expenditure on medical treatment and stay abroad will be exempt to the extent permitted by the Reserve Bank of India. So only to the extent permitted by the Reserve Bank of India. Secondly, the expenditure on travel shall be exempt in the case of employee whose gross total income excluding this expenditure does not exceed 2 lakh. So if the gross total income of the employee is more than say 2 lakh, then this exemption is not available. And the last point is, if the employer reimburses to the employee in respect of any expenditure actually incurred by the employee for any of the purposes specified in B, that is treatment outside India, A and B, so this one and this one, okay, it will be exempt subject to the same condition as specified in B1, this one, and B2. Okay, thus we have covered 3 types of perquisites. One is perquisites taxable in the hands of all employees and in all cases. Second one, perquisites taxable in the case of specified employees only. Who is a specified employee? You have understood. And the last one is tax-free or exempt perquisites. So by this I have explained the perquisites. So in the next class we are going to go for valuation of perquisites. We are going to study the valuation of perquisites. How to compute the perquisite value of each and every perquisites. So thank you very much for listening to me carefully. Thank you.